Hi, and welcome to Sisters for Fi. In this video, we are going to cover all about emergency funds. What is it? What counts as an emergency? How much do you need? And where do you keep it? Thanks so much for tuning in. My name is Catherine Agupjan, and here at Sisters for Fi, we help you manage your money better so that you can live a life of impact today and tomorrow. Let's start first with a big question. What is an emergency fund? An emergency fund is basically cash reserves that you have set aside for the just in case. An emergency fund is easy to liquidate and fairly accessible. And when you think about an emergency fund, it's all about buying yourself peace of mind. With an emergency fund in place, you have the time and the space to make decisions for the long term instead out of fear or panic. With an emergency fund in place, you are less likely to tap into credit cards, which may potentially have high interest attached to it. With an emergency fund in place, you are also less likely to liquidate assets at a loss in case you need cash. For many of us, money can be a source of anxiety, and an emergency fund can help reduce that fear, that anxiousness, if something outside of your control, something out of the ordinary happens. Think of an emergency fund as insurance. You have it in place, but you hope to never use it. An emergency fund will cover two things. One is income loss, and two is an unforeseen large expense. So, what exactly counts as an emergency? Well, let's look at it this way. There are some things you know will happen. If you get married, if you are traveling, if you buy a house, or if you have a car, you know it's good to plan for certain things ahead. Perhaps you put money aside for maintenance, you put money aside for your travel, and those are planned savings or things that consciously you know will happen. Now, emergencies are basically things that are out of the ordinary or things that you are not expecting. And I mentioned before that emergency funds are basically insurance. They will cover you in case you have a loss of income and can't pay your bills. And two, if there is an unforeseen, extraordinary event that happens and you need to pay a large expense for. And this is an expense that you did not plan for, or didn't even foresee happening. An emergency fund is there for the loss of income. So if somehow you get laid off or you leave a job early, you'll want a buffer in case unemployment claims take time, in case disability takes time. You still want that cash reserves on hand so you're not scrambling to find this money that you need for your current living expenses. And emergencies will vary from person to person because it also depends on what kind of resources you have access to. If you have a large family that you can tap into, your emergencies may not seem as big since there's other people to help you. But if you are single and only depending on yourself or a few small group of people, having a core emergency fund can help you just bridge that gap between getting income or paying for that large expense. So, how much do you need in terms of an emergency fund? Now, the typical recommendation has been 3 to 6 months of living expenses saved up. Post pandemic, it's risen to 6 to 9 to 12 months because there's a lot of uncertainty. But I want you to know that your emergency fund and the amount you have is unique to you. Now, the amount of your emergency fund should change as you move through different life stages. It will also vary on your personal money background. If you come from a history where money was a source of anxiety, you might want an emergency fund that is larger for yourself, as it can help reduce anxiety and provide you a little bit more freedom from worry. If you are single and only have yourself to worry about, you might not need as large of an emergency fund because your expenses are fairly low and there's most likely ways you can reduce your expenses even further as a single individual. If you have a family and you have dependents It might be necessary to have a larger emergency fund because now there's many factors that might influence you earning more income or you having larger expenses. In the case where you lose your job, if you are in an industry where it's easy to find a job, or you're in a metropolitan location and there's plenty of jobs available, your emergency fund may not need to be as much. But on the opposite side, if you live in a small town or you work in a very niche industry, saving a few months of expenses can help you bridge that gap until you find a new opportunity. As you grow older and have more assets and have formed a very robust credit history and score, your emergency fund may not need to be as large, primarily because you have access to these other cash options. You could liquidate your long-term assets. You could also tap into cheap credit using your robust credit history and score. Hey, if this video has been helpful, give it a thumbs up, share it with a friend, and consider subscribing to Sisters for Fi, where we share money lessons each week. Saving for an emergency fund can seem daunting because of the amount that you have. Now, keep in mind though that this is based on your current living expenses. If needed and if possible, there's certainly ways to toggle and reduce your living expenses. This might mean getting a roommate, moving out of your neighborhood, or figure out other ways to cut expenses like selling a car and reducing those liabilities. So work to save on the minimum expenses first so that you can start to build that emergency fund. How do you save for an emergency fund? There's 3 key things you want to do. The first one is to create small savings goals. Make sure it's achievable so you can build on top of that. 2, get intentional with your spending. Review what you're spending your money on, see if it's worth it for you. Save where you can and use that money towards putting it in your emergency fund. And 3rd, automate that process. Any extra money you get, put it directly and automatically inside your emergency fund. Set aside a certain amount each month, each week, no matter what, to put into your emergency fund. Saving for an emergency fund takes time, but it is worth it. Now, where do you keep your emergency fund? Emergency funds are typically saved inside high-yield savings accounts or money market accounts. What you'll be looking for is an account that's easy to access, FDIC insured, separate from your checking account, and supports automated saving options. High-yield savings accounts and money markets accounts typically have higher interest rates than your checking accounts, so you do earn a little bit more in comparison to your checking account. One of the things you do not want to do is to put your emergency fund in the stock market because the market can be very volatile. Your money can fluctuate, and there may be an instance where at the point where you really need money, you'll have to sell at a loss, which reduces the amount of your emergency fund. So where do you find a good high yield savings account and what bank works? You can go to bankrate.com to check the latest rates on the high yield savings accounts and money market accounts. Many of the online only banks will provide a little bit more higher interest rates than the regular brick and mortar because they don't have a lot of fees to account for. So that might be an option. A lot of the new fintech companies are also offering higher than normal interest on their high yield savings accounts to increase user base if that's also something you are interested in. So right now, inflation is at an all-time high, and putting money in a savings account where it's technically losing purchasing power can seem counterintuitive. But keep in mind that the point of your emergency fund is to buy you peace of mind and security. You really hope you don't need to use it, and at some point, your emergency fund will change so you can shift towards more investments that provide you more returns. A question that comes up often too is, should you chase rates? Should you move your savings from one account to the other to take advantage of 0.5% or 1%? And my take on that is beware if you do that. Some of this can be time consuming, and a part of this too is that you have no control over what the terms are and conditions are of some of these accounts. So you may be jumping through hoops to get your balance at a certain rate before they change the terms and conditions, and you've lost out on that higher interest rate. Instead, focus on building up that amount that makes you feel secure. Doing so will most likely earn you a level of security and confidence, which will allow you to pursue opportunities that may increase your income and ultimately your net worth in the end. Sadly, the banks are not incentivizing you to save. If we look at the terms and conditions of many of these accounts, some accounts actually penalize you for saving a higher amount. So instead, work on bettering your skills, work on finding new opportunities to earn your income instead of chasing those 1% rate increases for your savings account. I'll also share some other banks where you can open your high yield savings account if none of the banks on Bankrate.com resonate with you. Remember to also check with your existing banks as well as your credit unions for your company or industry to see if there's rates that work well for you. As you become a more disciplined money manager and you have a robust emergency fund, there's a critical point where the emergency fund becomes an FU fund. It's basically a way to say that when you have money set aside, you buy yourself a strong sense of security. And that strong sense of security can lead to confidence. It can lead you to operate out of strength instead of fear. So now you can speak up more, you can pursue opportunities, and you can use your strong emergency fund to create a different life for yourself. Everyone needs an emergency fund. It is a hallmark of financial independence. As we have learned, the amount of your emergency fund can vary and should vary as you move through different life stages and as you learn to manage your money better. For those just starting out, figure out your basic expenses and work towards saving up to meet those expenses. Find a good enough bank that is FDIC insured, that has a little bit higher interest rates, where you can park and put your emergency fund. In the meantime, with your fund in place, use that level of confidence and security to pursue other opportunities to boost your income and boost other success. No one sees your emergency fund. It's yours and yours alone. So do it for yourself and do it for your loved ones, and make sure you use your money to buy you peace of mind, security, and confidence. Thanks again for tuning in. If you want more money lessons, subscribe to Sisters for Fi and check out these 2 videos about investing if you want to grow your money faster.